You are listening to ChartingWealth.com for Thursday, the 30th of June, 2016. What do we see going on in the market? Well, we always start with IYY. That is the Dow Jones iShare U.S. Total Market Index Fund. It tracks the entire market. We always start with our two-day chart. What is it showing us? Well, we see on the 27th, which represented all the down movement in the market on Friday, and the following Monday, that is a two-day candle that represents. Following the Brexit, we had a big down candle, lots of down movement, a wick on the bottom that went even further down, a big full red down candle. Again, those of you who don't understand the Hinkin Ashi type candlesticks we use, that means average pace in Japanese, please go to our website, chartingwealth.com. You can also go to our page at YouTube, and you can see the training we have there. It explains it to you fully. We're very proud of that. And learn what Hinkin Ashi candlesticks are all about. They're different than your regular candlesticks. We like them because they do show you the average pace a lot better. We saw the market continue to rocket down, and it was already in a down move. It had started that back on the 15th of June. Started moving down, then slid sideways for a couple of days around, 4 days around the 21st and the 23rd, and then it rocketed down for that two-day candle ending on the 17th. What did we have happen for the candle that ended on Wednesday, the 29th? Well, for those of you who thought, hey, the world's over, the Brexit's taken place, let's just jump in and keep riding it down, we said, hey, only fools do that, or people acting like fools, jumping in on the bandwagon, listening to the press, selling you doom and gloom, keeping you glued to the television so you'll buy the stuff that their advertisers are trying to sell you. We, however, look at the stock charts, and we realize that there are bounces, and there are people who take advantage of bad news to drive the market down. But the problem, of course, that you run into is if you listen to that news, they will sucker you in to jumping in only to move the market back up and drive you out with a loss and take your money and feel good about it. Well, we like to pay attention to these stock charts, and that's one reason that we employ pullbacks. What does the candle look like that ended on the 29th, representing the movement on the 28th and the 29th, the two-day candle? Well, it is a green up candle. Actually, it's more like a spinning top. It has a long down wick and a bit of an up wick. It's a solid green candlestick, and it represents up movement over the last 2 days. On Wednesday alone, the up movement was 1.74%. After that big drop for 2 days, the market has bounced up. Now, what's interesting, as we look at this, the reason we are still waiting to see if this is a dead cat bounce, we see that the derivative oscillator has continued to heat up. We've seen a kink in on the MACD. It is closer to the signal line than it was back on the candle ending on the 27th. They're still far apart, but the derivative oscillators continue to gain downward speed, so we shall pay attention. What's very helpful using our charts, particularly our Hinkin Ashi candlesticks, they help us try to see what's happening, as well as the MACD and the derivative oscillator, the moving average convergence, divergence. Now, let's see what our 4-hour chart tells us happened over the course of the day. We see the market, as of now, bottomed out at the end of the day on the 27th of June, and then started moving up on the 28th, that was on Tuesday, and then on Wednesday moved up even further. Big green up, open green candles moving up with just wicks on top. Again, those are strong up movements. Crossed over, going up at the end of the day on the 29th. So we have a confirmed short chart crossover going up. Now, does that short chart crossover mean that the entire market is going to keep going up? No, it could be a dead cat bounce. We are watching. Derivative oscillator still in negative territory. A cross at the end of the day could easily move back over in the morning. If the market starts to roll back over again, watch for that. It may mean that the market did have a dead cat bounce. Remember, a dead cat only bounces once. And again, you can get fooled by that, so be careful. Don't start jumping into up moves so quickly. We'll watch and see what happens. Now let's go back to the 2-day chart. Going to take a look at the S&P 500. What do we see going on there? It looks somewhat similar to the total market. We have a green spinning top, lots more down wick than up wick. And of course, that is reflected by the derivative oscillator continuing to gain downward momentum. We still see a huge down red candle for the charts ending on the 27th on the 2-day chart. But this new candle that ended on the 29th, representing the 28th and 29th movement, is a green up candle. But again, we don't have a crossover yet. We do have a little bit of a closer coming together of the MACD and the signal line, but derivative oscillator is still, like we saw on the total market, it is still in the negative and accelerating. What do we see going on with the 4-hour chart? Well, we see 4 candles representing 2 days of movement as up movement, just like we see reflected by that previous 2-day candle. We did have a crossover at the end of the day on the MACD. On the 4-hour chart, however, the derivative oscillator is still in the negative. We shall wait and see how things develop in the morning. But that is where we are. Again, it is a nice pullback. If we have a rotation back over going in the same direction down that we see confirmed in our big chart now, we'll of course want to jump into that down movement. Again, how do you do that? How do you get into a down movement? Why would anyone want to get into a down movement? How do you make money if the market's going down? Well, SPY is an exchange-traded fund that represents, of course, the Standard & Poor 500. If we put into our free stock charts chart SH, what pops up is ProShares short S&P 500 ETF. In other words, this ETF goes up when the market's going down. Over the last 4 candlesticks on the half-day or 4-hour chart representing 2 days of movement, it's been going down. But if the market rotates and starts going back in the opposite direction, that is for the S&P 500 starts going down, the SH, the short, that is the inverse ETF of the S&P 500, will go up. So there are ways for sophisticated investors and traders to make money when the market's going in either direction. In fact, I've been working on today, I'll try to record it tonight, a really good teaching and training on inverse funds, what you need to understand about how they work, their pluses and their minuses. I'm going to be getting that out to you soon. So watch for that. But again, remember, they're inverse funds that you can make money when the market goes in the opposite direction. Now, again, we're not a stock calling service. We're an education firm, but we want you to practice these things so that you can get better and better. And at some point, you can make your own decisions with your own money. But right now, practice. Learn to read these charts. If you can master the charts, man, you are being given the keys to the kingdom. Okay, now let's go back to the 2-day chart, and we're going to look at the Qs. What is the Qs? Well, that's the NASDAQ 100. What do we see going on there? Well, we see similar to what we saw in the IYY and what we saw, which is the total market, and the SPY, the S&P 500. We see up movement. In fact, the Qs was up the most for the day, 1.75%. Again, it is not really so much a spinning top. It's just a green up candle, not very wide. And it's got movement down greater than the up movement. And again, when we look at the Qs, the derivative oscillator is just about where it was in the prior 2-day candle. We do have a kink that's formed, bringing the MACD closer to the signal line, but still, they're both still going down. We don't have any big acceleration toward a crossover, toward a convergence. If we look at our 4-hour chart, what do we see going on? I accidentally pulled up the daily. The 4-hour chart, we see 2 days worth, that is 4 half-day candles of up movement and a crossover at the end of the day, crossing through the MACD, and the derivative oscillator crossed over at the same time. When we see the derivative oscillator and the MACD go in the same direction, usually is a portend that that movement will continue. We will just have to see in this market just what happens. We'll let the charts tell us what to do, right? We don't listen to what the news people tell us. We listen to what the charts tell us. The charts are what you go by. Don't pay attention to the noise. Okay, now lastly, we are going to, and again, we have a confirmed backup, okay, confirmed backup on the Qs and on the S&P 500. That is the NASDAQ 100, S&P 500. Lastly, on our 2-day chart, we're going to look at gold. What has gold done? Well, gold had an up day, up 0.41%. Now, again, the way we calculate our Hinkin-Ashi type candlesticks, we actually have an open red box. Again, it's calculated differently. We have only an up wick on that box, so it's showing us the average pace has slowed down. We continue to see the MACD and the signal line diverge, that is, move apart from each other, and the derivative oscillator has remained about the same. Now, again, gold is in a confirmed up move, has been since the 13th. It did start going down on the 2-day candle on the 21st and the 23rd, and then, of course, accelerated substantially after the Brexit on Monday and Friday of last week and Monday of this week, and it's continued to move up as far as this candle goes. Had some down movement and some up movement. Again, it's a red open box candle. Okay, which means uncertainty for us as far as the Hinkin-Ashi type candlesticks go, even though for the day it was up 0.41%. Now let's look at the 4-hour chart and see what we see. It looks like gold on the 4-hour chart has been really topping out, sliding sideways. In fact, the MACD and the signal line are converging, that is, moving toward each other. Derivative oscillators continue to lose energy since it topped out on the 28th in the morning. So of the last 3 movements of the derivative oscillator losing energy, we shall see. Sure looks like gold has topped out, but again, that's just what the 4-hour chart is telling us. We shall see. If we have a backup, that is a crossover going down, then we might look to get into gold to see if it's possible to ride it up further. But again, for the people who bought gold at any of these junctures, very questionable. When you have the market make these huge bump ups, getting in late is not a good idea because the market's going to digest the gains or the losses, and then it may continue to move in the direction it was headed in, or it may reverse. That's why we like to use our short chart to confirm a backup, and then when it rotates and crosses over in the direction of the big chart, that's when we jump in. The safest time typically. Okay, and again, generally speaking, thanks so much for listening. We appreciate you being with us. We love to hear from you. We hope that you're paying attention, learning a lot. Whenever you see big things happening in the market, it's some of the best times that you can practice. You can go in and learn what's really going on. Make sure to follow us every day. So important to know what's going on, where things are going in the market. We sure appreciate you. We love to hear from you. Thank you for everyone that has been subscribing to the YouTube channel. Like we said, once we hit the magic 1,000 subscriber mark, even though we have thousands of people listen every week, 1,000 subscribers will give us the ability to do proprietary broadcasts to you. So you want to help us out, go and subscribe to the YouTube channel, please. Additionally, help us out at iTunes. Subscribe to our channel there or to our podcast. And you really want to be a good friend to the show, give us a good 5-star rating. Say something nice about us. You can follow us on Facebook, Twitter, Instagram, YouTube, you name it. We try to be there for you. We love to hear from you. We're going to be putting out some more training, so watch for that in the next couple of days. And we're just here for you. Let us hear from you what we can do for you. We appreciate you. From chartingwealth.com, we wish you the best.